What's going on, everybody? Welcome back to Foxhound Finance, where we analyze the stock market using technical analysis. Please understand that I'm not a financial advisor. Nothing in these videos is financial advice. Please do your own research and buy what you want to buy. All right, guys, I'm back again with another AMC update video for you. And this time we have some very, very exciting developments regarding the latest price action. So we're not going to waste any time. I'm going to jump right into the technicals and the indicators and go over what I'm seeing here. All right. First things first, let's just look at the outline of the structure. I said this a million times, guys. We have the descending resistance lines that I have mapped out here. And I've said 100 extra million times that we must break these resistance lines if you're going to see significant price action to the upside. Well, that is something we accomplished finally. Finally, we broke not only the 1188, I told you guys that I think in the last video, and this was probably going back like 10 days. This one right here, we broke pretty easily sideways because, I mean, we were descending so hard, and this angle on this resistance line is so tight that we by default pretty much stagnating with the trading, with the price action, broke it. Okay. And we didn't see anything super significant after just breaking that one. But again, that wasn't the most significant resistance to break. The big one was here, the 556 resistance trend line, because as this was established in December, basically what, a year and a half ago, right? You have seen nothing but rejections at that line. And then when we finally got some nice, smooth, although downwards price action, I created this channel here just to follow this to see at which point this was going to break out. And you got multiple rejections at the top where the resistance lines were, and even within this channel right here. Okay. All the way to the point down here, we hit our 93 cents. And then as you can see right here, we officially broke out of the 556. So I'm extremely happy about that. I think the biggest thing about breaking out of this right now, like I said before, was we needed only like $1.35. I think last video. I think that was it right there. $1.30, $1.35, and closing above that line, if I can remember right, was like indicating to me that we were going to have this actual continuation to the upside, not a situation. And I did say multiple candles. I wanted multiple candles above this line, and we got that, guys. It's not like we broke it and then we got sucked right back under it, because typically we've seen that where you have this nice move and then all of a sudden AMC wants to come back in and do this, bouncing around in here like that. All right, we did not get that. So that's very exciting, and it tells me that this all-time low is officially in. I don't see a world where this comes down, and I know we were making fun of Nicholas Pintano about the 50 cents, and I was joking last video calling him the Italian 50 cent, but I just don't see that. And I said that last video, I just don't see this coming down to 50 cents. It doesn't really make sense. And before I go on any further ranting, I'm going to just jump into our pivot points while I'm on the topic, because this is where I painted it pretty clear for you guys on the new pivot points, which is the supports and resistances for the month of April. And again, down at S3, we had 54 cents. So that was like the Pantano zone, right? What he was saying he thought it was going to go to. However, this thing only got down to 93 cents. It didn't even touch here for April, the new first low, which would have been 85. So it didn't even get close to that. All right. We immediately got candles printing above our blue pivot line, which I told you, if you want to see price action to the upside, you need candles printing above this blue pivot line, all right? And not only did we do that, but we beat resistance 1, 2, and 3 very easily. I mean, just right through. The only real red day we had was like right here, and even then you could see the wick. The candle was just like closing up, like it wants to just keep pushing. We got a wick right here, right, with this price action kind of closing down a bit. But it makes sense because look what you just did. You broke through R3, all right? And I told you guys in the last video, what would that look like if we break R3? Well, looking at the RSI in relation to the pivot points, you're in the overbought zone, all right? You're at 82 RSI. That is significant heat on the RSI, meaning at some point I expect a pullback. And it might be pretty significant. It might look kind of scary. I know people are going to be dooming and glooming it out there, but let's just say Monday we opened up and this thing starts to trend down like this. I'm actually fine with that, because as long as we can hold this new support that I've created, and I've told you guys this many times before, if it's not going to be a situation where we trickle up and then immediately, I don't even need this one. But let's just say even option one would be this comes down really rapidly and we touch this trend line, right? I told you guys that when we get the breakout, we may need to retest. So I won't be surprised if this comes down just to cool off. It'd be perfect to get that retest at this resistance line of the 556 and then start to continue up off this. So really, that is scenario one. The other scenario is, you might get a trickle down like this to the support and it may just hold. But for me, I think the first option makes the most sense, that you get this like flash down right here and then start to build off that with this new support. And I do think that looks really good in terms of like progression. But just the way this is moving right now, I'm not ruling out the other third scenario, which is we just continue melting up to that target that I told you before. I don't want to do anything super out of order, so let's just do it like this. Let's look at our EMAs, and then I'll show you the VP fixed range, because it's going to kind of show you our target that I'm looking at. But with the EMAs curling up, this is where I'm kind of like contradicting myself a little bit, and had to play devil's advocate here, because yes, we are heated up on the RSI. Yes, we blew through the pivot points and all the resistances handedly, without a question, blew right through them. But when I'm looking at the EMAs, I'm seeing right here that the 9 crossed to 27, which makes sense. I mean, at that point, those are your lower time frames, and those are the first that you'll see curl up with price action. But guys, I'm looking at the 27 now is about to cross the 48. So unless somehow price action really comes down hard on Monday, Tuesday, where this doesn't happen, this crossover, then they would start to kind of curl or flatten out with each other, right, until the next move up. But right now, at this current rate, these are going to cross over like Monday, Tuesday, all right, depending on the price action. Like a push up to this 200 EMA right here at $2 even is going to cause this to cross over. And when that happens, you're going to get more price action to the upside. Okay, so I'm going to be paying attention when this crosses up. And again, this is on the daily time frame. So very significant crossover about to happen. You even have the 9-day EMA about to cross over the 100. So if this is going to cross over the 100, and then the 27 is going to cross to 48. Well, I expect nothing more but bullish price action to hit. Now, the other side of that coin is with the 200 sitting here, we also said in the videos prior that the 200 has been such resistance for so long that, yeah, we might get impulses past it, and then all of a sudden we just come right back underneath in one big candle. But right now, as this is constructed, if these two crossovers happen, guys, simultaneously, I think you're really going to obliterate the 200 EMA and you're going to fly right past the damn thing. I really don't see it being resistance anymore at this point. I mean, look, given the range here, it doesn't make sense for it to stop us out. But again, I want to be objective. I don't want to get too gung-ho here. But yeah, EMAs, very significant setup on the EMAs, man. It looks really, really good. So kind of contradicting with the technicals with the pivot points and the RSI versus the EMAs. And also, I guess while I'm at it, since we're talking about crossovers, here's the other bullish, I guess, strength-based case is the MACD. So the MACD has finally really crossed over hard here. I'm going to try to zoom in here. So we finally got the full crossover hard. It's actually past the histogram bars. So when you're seeing the signal lines crossing over the histogram bars, that's nothing usually but bullish. And you could see the volume here increasing steadily on the bars. So, I mean, it's not even like volume's died down yet. So very significant there, but that's on the daily. I want to really zoom in here. Like as we go into the weekly, you guys will start to see why I'm kind of more so excited than ever. If I can find the damn, where is it? Why is it not letting me? Won't let me grab it. Interesting. Oh, Right there. Oh my god, I have to like stretch it that far. Oh, okay. Sorry about that. That was really annoying. All right, so you got a crossover on the weekly. Like, look at this. You have not had bullish weekly MACD since, I mean, this is when it was fading, but I guess the start of it would have been like back here. So September 2025. This is the last time we've seen bullish weekly MACD bars. Okay. We can even say October 2025. So that is crazy. And then you've had nothing but red bars here, although diminishing. Still, we just flipped bullish for the first time in like a year. So that is very significant. Let's go even further. I wanted to look at the quarterly. All right. Specifically because here is where it's going to get freaky. I know this is going to be kind of a longer breakdown video, but again, a lot of shit happening here. So this is what I wanted to show you guys. Right down here, you could see during 2021, March leading into the June squeeze. Look at how many red bars you had leading up into that. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 red quarters. Okay, 15 red bars on the histogram. Bearish, 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 back to back, 15 in a row. Okay, and then you flipped bullish and price just soared. It exploded. All right. Obviously, you could see right here, bullish volume just died out and faded. We flipped red. You could see MACD cross the signal line to the downside. And that is obviously, I mean, looking at it, it's a wrap. You know what I mean? And look how far we fell. And then I'm looking at this and I'm counting again, how many red bars do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 red quarters or red bars here in a row. And wouldn't you know, MACD is about to cross the signal line even on the quarterly down here. So on our super longer time frame, guys, a crossover like this, and look at how weak the bearish momentum is now. I'm telling you right now, we are like right there at this pivotal moment where price action is ready to just go nuclear. I just don't want to get too gung-ho about that because the chart has changed with that split and conversion. We can't just do a complete one-to-one. But again, I've shown you our price targets, and I'm going to go over them again, okay, where we're at right now on the here and now of the chart. All right, minimum what I could see this going to. But this looks really good. I mean, weirder is that look at how the MACD was down here before we jump into the next segment. MACD was much further from the signal line. The MACD line was much further apart. Look how tight it is here. Just very scary, the kind of momentum that is building right now on AMC. So pay attention to that one. That'll be the mega crossover right there. You get that, and I think this thing could just be insane. So let's go back to our daily setup. We already covered our pivot points. We covered the EMAs. We covered our MACD, looked at the RSI, volume profile, fixed range. That's what I want to look at. And then we will close it out looking at, again, our price targets and sort of the progression of the moves that I could see happening. So let's do that. Let's jump over here to our fixed range VP tool. It'd be nice if I didn't have to draw this out every single time, but I don't like all this shit in the way so you guys can actually see the chart. I mean, I got enough stuff marked. So we're going to take this stuff from the 1188 peak that we had back during that last huge run. And we're going to ride this all the way down to the 93-cent level. All right. And I just want to make sure I got this accurately. You want to make sure that when you're doing that, you're trying to find the true low, because then it'll be very accurate. There we go. And we got that locked in. So let's talk about progression real quick and the price targets, all right? Let's see how the hell are we going to get out of this situation that we're in. And you see this big bar here, this giant volume bar in the middle with this dotted line. That is essentially the point of control that we got to break past, okay? That is our resistance, but also the point at which the stock is going to track to. Price action is going to go there. You're going to see your candles like right now playing out in front of us, printing up towards that level. Now, how this reacts when we get there is the biggest question, right? Because typically what you could see like I said in prior videos, is like, let's say right now, we start heading up towards this line. You could get rejected here because that is a huge bar to break volume-wise, all right? You could get rejected here, and again, that would complete the, the more ugly thesis of just taking a recovery, a little break, testing this breakout of that 556, and then just continuing after, okay, to the upside. But that's the whole point, guys, is we need to get past this. What is this? $2. Let me take a peek at this real quick. When we get to $2.83, that is when you're going to have to kind of pay attention and say, all right, what's going on here? If we start seeing candles getting rejected and you start seeing wicks forming at that level, then you know for sure that this is going to do a pullback real quick. All right, it's going to do a pullback. We're going to get a test for confirmation that the stock and the price action is ready to continue moving upward, or not. It will continue blowing past this. And really what I'm seeing here is this. I'm going to go bearish first. Let's say it looks like this. Okay, we get rejected. We have to come back down. We test the top of this. And then, as you can see here, there is a gap in between. So there's a space here. These two little bars are going to pose no threat, especially once you get past this guy. I could see us exceeding that, maybe catching a little stoppage here, right? And then pulling back to some level. And then once you are able to do that and accomplish breaking through this bar, then I think your stop would be here. This is going to be on the here and now, okay? So this is kind of our bearish case in the sense that, or I should say not even bearish, but like slower progression. Let's just call it that. This will be the slower progression move where you come up, test, and then work your way through all these volume bars. But here's my problem. And again, this is where this is two versions of myself fighting here and trying to debate, like what's going to make sense. So history tells us that when you get past the significant resistance in the volume bars, right, you would now exceed up through this gray volume here because there's nothing here, guys. There's no resistance or volume here for price action to struggle with. It's all down here. Everything has been down here for 2 years almost, okay, as it's currently constructed. So the whole idea here is usually when you get up here, yeah, we could just float right through this and at least get up to another test at the $11 range, okay? But you have this 1390 resistance trend line in the way. So what I'm looking for is when you get up here, and mind you, this is going to be at, what is this, almost $6, like $5.97. We might as well call it almost $6. So if we work our way up and do it this slow progression way, I don't think it really matters whether we do it in a slow progression way or we do a straight shot up to this. Like we could open up Monday, Tuesday for sure and just take a straight shot up to this. But the problem remains the same. It's this resistance line in the way. I want to see how price responds at this. If we get a nice breakthrough and this just keeps exceeding, and then say we have to do the same thing, we come down and test this, but then continue, guys, it's for sure over. I mean, there's not even a question for me. It's just this is the immediate resistances that we have to break. And I say that because as you can see, yeah, you come up and break out. Let's say you get to like $9, $10 and then it cools off again, tests here, and then starts to move off that. You're in like squeeze land because look at this right here. If I draw a horizontal line, you guys will be able to see this pretty clear as day. Let's thicken this really quickly. Right here. Okay, that is your $13 level. This is all that remains as a resistance. So, of course, I could see us coming up to that, playing around, and then maybe you come back down again to some level. Maybe you come back, double test it before you get this massive push out of it. And again, I wanted to say that we have a gap. This is getting so wide. We have a gap right here on the left. So even if price decided to take a visit, and what is that at? $19. Yeah, we're right there. Perfect. So even if price came up to that first gap fill, and then we decided to say, okay, another cool down period, let's test the top of the 1370, and then we'll go for the next gap. That next gap is all the way up here at $43. So you would have a crazy shot straight up to $43. Okay. This is kind of how I could see this thing playing out. And I know it sounds crazy because for so long you've been seeing nothing but this price action fall down, but this is only going to last so much. This is with any stock, guys. So, when you have this like downward and then side to side price action for like nearly, I mean, how long was this going on for since we were under that line? 2023, guys, like 3 years nearly. I mean, it's insane. So, the way the market's constructed right now and how bullish everything's seeming, this would make sense at least minimum, like to get at least up to this gap fill, maybe into the top edge of this cliff at 48 to $55. I would be looking at that first, kind of similar to HYMC. All right. Real quick, let's just shift gears just so you could kind of see a comparison because I think HYMC, which is obviously tied to AMC, did a very good job of this, although it took fucking forever. But like, look at this setup right here for HYMC. You see how the same kind of flow is when you have this massive falling off, like the edge of a cliff. Price action came up very similar to that 1188 and then just descended down, 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 and then sideways. HYMC had a lot more of a straight, flat consolidation type of setup before breaking out. But again, guys, it's the same thing I've been telling you on the start of my channel if you've been following me. But again, this rounding bottom setup, right? Giant U that has formed right there for HYMC. It's kind of similar to what AMC is doing, although AMC maybe has a chance to kind of go faster than HYMC did. It might actually happen much quicker. So that's kind of what I've been seeing pattern-wise, very, very matched up with HYMC. All right, so I wanted to get you that visual there to see. Let's go back to AMC now. So again, look at the same setup. If you just take a step back and you look at this from afar, this is what I would be expecting first. And again, we can see what HYMC does, right? From this point forward. I mean, we can kind of cross compare a little bit just from a pattern perspective. Where again, we're not going to fall in love with the idea that this is a one-to-one thing, but a lot of these patterns like Robinhood and Carvana, they had very, very similar setups, okay? Time frames vary a little bit here and there between them. None of them are the same time frame, but the setup remains the same. So I'm just paying attention to this initial setup here because all of this up here, I understand people are like getting googly eyes looking at this $393 price target. But when you do a split like that, guys, and it kind of like resets the chart, the only thing that we can really look at with complete certainty is when that split took place, which was right here, and then fell off. Like this entire zone is more so what I'm concerned with. Listen, anything after that, guys, I'm fine with. I don't give a shit if it goes to $300. I would be making over $2 million or something crazy like that. So for now, for just sanity's sake, let's just pay attention to this right here because this is, again, where everything kind of began with the ape conversion stuff. And so if we exceed past this level, then we already know where we're headed. All right. I will be following that pretty damn closely as we develop there. But I'm going to look at the here and now, which has been this box that we've been stuck in forever. So I hope that kind of paints the picture clear as to kind of like what the targets could be for you guys going forward. But again, more so immediate sense would be to look at this level here, 13, and then more so this descending resistance right here. I want to see what price action does going into next week. And I will keep you guys up to date. Again, I'm very busy. I'm doing a lot of house projects and things like that for the summer. So it's been very hard to get here, sit down, and then try to deliver information in the most clear and concise way. And even still, when I do that, I kind of am all over the damn place. So that's it. That's all I have for you guys today. Really excited for it though, man. Even to come from 93 cents, like I said, up to $6 would be nuts. That would be crazy to see. Box office is going off right now. There's so many good movies coming out for April still. I think the Michael Jackson movie is coming out on the 23rd. So I believe that's going to be like going into next weekend. It's just back-to-back bullish scenarios, guys. You have SPY at 710. We already covered that multiple times on my channel. You guys can go all the way back. And just all the projections that I saw happening and playing out are now doing that. So really cool to see. And it's nice that when you put the work in and you really take time to study this stuff, that it pans out the way you thought it would. So really happy about these developments. And I know you guys definitely are right now, but we want to see more. I think we definitely want to see more than just $1.90. But this is a really good start. So if you guys are new, make sure to subscribe, man. I will keep you up to date. And at this point, you guys know to pay attention to $6. That's the biggest thing I think I want you to know going forward throughout the week and maybe next week is that $6 level. So keep that in your head. Watch price action. If you start to see price ascending past that, I am all for it. And that looks really damn good. So I will catch you guys in the next update. Everybody take care. Keep your hat on. All right. See you then.